Okay, now in this video we're going to be talking about LIFO perpetual, put that label up here, last in, first out, perpetual inventory. So last in, first out means that I sell the most recent purchases first, whereas FIFO, remember, we were selling the oldest purchases first. So it's kind of just the opposite. The data they gave us is exactly the same, which is good. You can kind of see how this works on multiple levels. So I'll be building the same spreadsheet, but obviously I'll be using, it'll differ because of the fact that we're using a different method. We're using LIFO rather than FIFO. So I went ahead and filled out the first day inventory, the beginning inventory. Remember, this is my beginning inventory. And therefore would be my oldest inventory, and I've got no purchases. It's just my beginning inventory number here, 1,000 units at $20 per unit for a total cost of $20,000. January 4th, I made a sale. This isn't going to change either, and the reason why this isn't going to change is because I only have one layer of inventory. So I sold 700 units. My cost is $20 per unit because that's the only layer of inventory I have, and so that stays the same. Now, what do I have left? I have the 1,000 units I started with. I sold 700, so I have 300 units left at a cost of $20 each for a total inventory of 6,000. So that really, if you remember from the last video, if you watched the last video, that didn't change yet from the prior video because we only had one layer of inventory. And a layer of inventory, I'm just meaning that we have multiple costs. If I have more than one cost, that each cost is a cost, what we call a cost layer. Okay, January 10th, we bought 500. So we have a purchase of 500 for a cost of at a cost of $22.40 each for a total cost of $11.2. So now I have two layers of inventory. I have one layer that I spent $20 per unit on. 300 units are left, $20 each, and $6,000 is the total cost. And now I've bought an additional 500 units at $22.40 each. For a total cost of $11.2. So now I've got two layers. This is layer one. This is the oldest layer. This is layer two. This is the newest layer, the most recent purchases. Then on January 22nd, we sold 360 units. So selling 360 units. Now I am using LIFO, so I need to use the most recent purchases for this sale for my cost. So over here under cost of goods sold, I need to use the most recent, which is this 500 units here. I have enough in that layer, so I don't need to worry about going multiple layers like I had on the prior problem. So I sold 360 units. The cost was $22.40 because I'm using the most recent purchase first. And $8,064 is my cost of goods sold. Now therefore you can see there's a difference between what we've had to do here under FIFO and what we're doing under LIFO. So now what do I have left? I still have all 300 units at $20 a piece remaining. And then I had 500 units at $22.40, a cost of $22.40 each. I got rid of 360, so I have 140 left, $22.40 each for a total cost of $3,136. Okay, now January, that's January 22nd, so now we're on January 28th. We sold 240 units, and it sells for $30, but we don't really care about that. So I have to insert another row here because I sold 240 units. I'm using LIFO, so I want this layer first. I want the newest layer first. So I sell from this 140 layer, but I don't have enough to sell all 240. So I'm going to sell 140 units, which all I have left at $22.40. It's a cost of $22.40 each. And then the remaining 100 units I'm going to take from the older layer, 100 units left, at $20 each, for a total cost of $2,000. So I used this layer first because it's the newest one, and then because I'm using last in, first out, and then I use this layer second. So now what do I have left? Well, this layer is completely gone, so I don't need to worry about that. And this layer I took only 100 of them from, so I have 200 left at the $20 per unit cost. I can multiply that to get 4,000. Okay, so that's what I have remaining in my inventory after my sale on January 28th. And then on January 30th, I purchased 600 units at a price of $23.30 each, for total cost of 600 times 23.30, $13.90. So I still have this layer of 200, and now I have a new layer, 600 times the 13,980, and I can total again. And remember that my total cost of goods sold, I total up the whole column because it's an expense account, and I want to know the total for the entire time frame. Expense accounts that go on the income statement are the total for the entire time frame. But for my total, my ending inventory, it's an asset. I only want to know a single number. I want to know what I have left in ending inventory to begin with, or to end with, excuse me. So I had 27.2 in my cost of goods sold and 17,980 in my inventory at the end. Now, because these are, so 45,180. What I want you to notice something here, and that is that the total cost of goods sold plus the ending inventory is going to equal the same either way, whether I'm using LIFO or FIFO. And that's because I'm using all the same sales. But one does go, cost of goods sold and ending inventory are different numbers. So 45,180 is my total ending inventory and total cost of goods sold. If I do the same thing over here, I get the same number, but notice that I have a higher cost of goods sold over here and a lower cost of goods sold over here, and I have a lower ending inventory and a higher ending inventory. So I've got LIFO, in this case, gave me a higher cost of goods sold, a lower ending inventory, just based on the change in method.